here for the last month since earnings. Kind of awaiting the next leg. So.
Okay. Okay, let's kick it off. We're a little early, but let's at least just kick off kind of a short-term preview of what we want to cover about today. Larry McDonald here with Todd Harrison, and Todd and I go back to the old days of Lehman. When my book came out, you were very good to us, and you had us by your office there. You're running a large company full of journalists and entrepreneurs. But let's go back to the early days of Todd Harrison and talk about the inspiration that got you to this point.
Are we live right now?
Yeah.
We are live right now.
We're live.
I thought we were starting at 4:30. Look at you.
Yeah, we kicked it off.
All right. Thanks for the heads up. I'm glad I wasn't doing anything, unseemly. Todd Harrison, about 30 years on Wall Street now, started in 1991 at the equity derivatives desk at Morgan Stanley. I worked there for about, 7 years. Was a vice president, went over to the buy side, a couple different shops. Galleon ran derivatives there, moved over to Kramer Berkowitz, was president and head of trading there for a couple of years through 9/11. And it was really the experiences around 9/11 that got me pivoted toward this path on cannabis. And it was being down there and seeing a lot of the things that I saw, the people holding hands and jumping and running from the smoke, and things that I didn't know what a profound impact that would have on my life at the time, as somebody who really just focused on Wall Street my entire career and trying to get to that level of attainment. At 31 years old, to be president of a $400 million hedge fund, you sort of aspire to that. And once I got there, it was an interesting evolution in terms of me, the person, versus me, the professional. A bit of a sidebar there, but nonetheless, after 9/11, began to really go through a period of change, I guess is the best way to put it. Certainly, things had changed. I didn't know what PTSD was for a good, decade after 9/11. I just knew that things were different and I felt differently. And it was during that time that I started to frequent a doctor by the name of Dr. Julie Holland. She's a pharmacologist in New York, and she also happens to be one of the world's foremost leading experts on cannabis. And she really opened my eyes to the space. She opened my eyes to the science. And as we often say, it was a bit of a rabbit hole for the intellectually curious once I started going down that path. And looked at the 30,000-year history of cannabis and the relationship it's had with mankind through all these different cultures, through the lens of wellness, not vice, but wellness. It really piqued my interest. And, fast forward, a few years, 2017, after studying the space for about 7 years, my partner, Lauren DeFalco, and I, and John Tiras, my other partner, we formed CB1 Capital, where we invest in the cannabis landscape. Fortuitously launched the fund about 6 weeks before the January 2020 top in global cannabis. So it's been an interesting few years.
So CB1 is a cannabis-focused asset management firm that specializes in U.S. companies and Canadian companies, or just U.S. focused?
Well, it's a global fund, so we have exposure across the world. But right now we're really now it's a bit different because we added back some Canadian exposure last month, and we could talk about that a little bit. But we think the U.S. is really the best risk reward in the near term, just from a catalyst standpoint and looking across the regulatory arbitrages that we think are ahead of us, but also from an addressable market standpoint. And certainly, not all companies are created equal, but we think that's the best opportunity on a relative basis. And, as we talked about a bit before you flipped the switch on me and we went live, certainly think that COVID-19, the coronavirus, has changed the conversation around cannabis, and happy to talk through that a bit if you'd like.
And break us down just, for the layman, because we have a broad audience today, the multiple difference, the difference in pricing between a Canadian company in the cannabis space and a U.S. company, because there are different banking laws, they're probably 2, 3, 4 years ahead of the United States in terms of the evolution of banking and financing, and not having to being able to have a bank account instead of being able to dilute your way. Well, what a lot of people say is the U.S. companies have to dilute their way to cash, whereas the Canadian companies have easier access to cash. Is that fair?
Well, it's a bit more complicated than that. Canada's had its own issues with regard to distribution and addressable market share because the rollout was a bit messy. And in terms of the U.S. and because of the regulatory challenges and the limited capital available, a bit of a cash crunch on the U.S. side. You have these the leaders trading at discounts to where the Canadian counterparts are trading. So, for instance, Curaleaf, one of our portfolio companies, is producing more revenue than Canopy at about 60% of the valuation. Green Thumb, which is another of our holdings, is.
So let's break that down for a sec. So Curaleaf, U.S. company.
Yep.
Compared to the big Canadian Canopy Growth, the all-star of Canada, which is the kind of blue chip Canadian cannabis company, is trading at a 60% discount. Is that what you said?
Well, just just in terms of the valuation for that revenue, and you're getting it at a fraction, or about 60% of the valuation. Green Thumb's about 40% of the valuation. Truly, which is another one of our holdings, you're getting that revenue at about 20% of the valuation. And there's a lot of moving parts around the U.S. and around that arbitrage, if you will, but not mutually exclusive. But again, Larry, to really frame how we got here, and here being June, call it 9th, 2020, right? Here we are entering the summer. Day 101 of the lockdown here in New York. A little bit longer if you're my family. We jumped. We fronted the lockdown by a couple of weeks. Back in late February, early March. But I think that the context is important, and this is an important dynamic to understand when talking about cannabis, because the coronavirus really fast-tracked a lot of the elements that I think were already in motion and brought those to bear. And as we talk about the anatomy of this turn, I think there's a number of different factors that I can talk through that played a part in it. The first one being field position and positioning of investors. And again, the global cannabis index that we track was down 92% from January.
Let me pull that up, Todd. Hold on one second. Yeah, you can keep going, but I'll try to pull that up.
Sure. The global cannabis index down about 92% from January of 2018 through March of 2020, or a couple months ago, down 92%. Pretty significant move for sure. And interestingly, throughout May, throughout April, when we were trying to borrow stock to put out some shorts against some long calls, we couldn't find a borrow across the cannabis landscape. That's U.S. majors, that's Canadian majors. That was really, to us, spoke volumes that the market was really offsides. The shorts were overstaying their welcome. But that doesn't really matter unless you have a catalyst, right? And certainly, I think there were a few catalysts that really came our way by way of COVID. The first, which was a minor one, but certainly, the wind started to change when you saw all the states deem cannabis to be an essential service. This was a pretty powerful moment for us cannabis enthusiasts out there, because we've gone now from illegal to essential in a matter of 2 years, call it. Pretty significant shift. Even if the regulatory landscape hasn't shifted yet, but between the downdraft we've seen in the sector and the positioning on the short side, when we saw the House include the banking provisions in the next coronavirus relief bill that they put forward a few weeks ago, or maybe it's a month ago now, I think that also was the shot across the bow for the shorts. That change,
Okay.
change
So
was.
let me frame this for us. So over the years, at the Bear Traps report, we have a chat, a live Bloomberg chat with probably close to about 500 institutional investors. You're one of them. You've been very valuable. One of the things you posted in the chat was this sector breakdown. This was like a month ago, and you were very cognizant of the capitulation. You know, we have our capitulation model, and I could tell you were measuring the capitulation process in the cannabis space, and you were referencing the amount of shorts, stock borrow. That's important because if you call around the street and you ask different broker dealers, you know, whether or not you can borrow the stock, if the stock borrow is tight at all-time lows in the sector, that's a very good high capitulation reading. In other words, that's an indication of a potential reversal. And that's one of the things that you highlighted in the Bear Traps chat about a month ago. And lo and behold, we had this move. We have the chart up there. The other thing you referenced was, you know, the .com industry, Bitcoin, the energy drillers. And if you go back the last 50 years, when you have a sector with that much capital in it, and you get that 85 to 95% drawdown, whether it be .coms, energy drillers, or Bitcoin, the mean reversion moves out of that with a couple of catalysts, as you're talking about from Washington, can be, you know, quite powerful. And I think your point is what really turned this around. Number one, obviously the Fed came through with $2 trillion of nice a gravy train for all sectors. But there was a turn in Washington and a turn in the States. That's kind of your point, what would really kick things off?
Well, it's funny you should bring that up, Larry, because the cannabis industry was shut out of the payment protection program and any other, you know, government gravy, as you so eloquently put it. You know, this is a sector that's really gotten snubbed and has done, you know, what it's done to date, despite sort of the disadvantages in the marketplace, or maybe we call them the pre-existing conditions in the marketplace. But yes, I think, you know, to a degree, you know, that started the turn. But what really started to accentuate it, you know, is because you saw the leaders on the U.S. side, and that's the Green Thumbs and the Curaleafs and the True Leaves of the world, post pretty powerful quarters, $100 million thereabouts revenue for the quarter, 40%, give or take, EBITDA, which was impressive to us on for two reasons. One, the operating environment. You know, they did this during a pandemic, and the second being that by our pen, 2020 is going to be a back half loaded year as a lot of the scale starts to come online, a lot of the construction starts to come online in the back half of the year. So the numbers, in our view, start to really pick up in the back half of this year. But all of this, again, in the context of an offsides market, and everybody had written off the cannabis sector writ large for a number of reasons. And we can go back and talk about how there was a vaping crisis, how there's no capital, how there's no distribution, how Pershing pulled the plug on custodying these assets in the fourth quarter. It was one thing after another, almost a comedy of errors that drove this thing into the ground. But now, you know, as we've seen this turn really take place, and we've started to see some momentum come back on the upside, the conversation's also changing. The narrative in the market's changing. We're seeing governors, we're seeing states, Pennsylvania, New York, Tennessee, New Mexico, the list goes on. They need the tax revenue. They need the jobs. It's estimated that cannabis is going to bring in billions upon billions of tax revenue, create 1 million jobs over the next couple of years once legalized. And you know, these states, these municipalities need this income to repair their broken balance sheets. So that was the one story. And another story that came out around Memorial Day that I think really shaped the conversation nicely away from vice and back toward wellness again was a research that came out of Canada that talked about the benefits of CBD as an aid in blocking cells that enter the body from the coronavirus, or that this could be a potential aid in the fight against corona. And whether or not that's true, and our scientists that we talk to happen to think that there is some there. It's going to take time to find that out. but it did reframe the conversation again. And all of these different elements combined to shape the price action. And for the first time in a couple of years, you have sector leaders. You have the U.S. leaders through their 200 days on massive volume. You have the Canadian leaders broken through their year-and-a-half-long downtrends on massive volume. Some of it's a short squeeze. Some of it's going to be certainly an uneven recovery in the space, given there's so many names and not all of them are well capitalized or well positioned for the future. But it becomes a self-fulfilling prophecy by our lens. We've seen the end to the cyclical bear market within the secular bull market for the cannabis space.
Yeah, and so on the screen now, we have an image of the S&P 500, what's called an HS screen. We just have it in our Bloomberg chat right now, in the Bear Traps Bloomberg chat with institutional investors globally. But we have it in there, and it's a fascinating chart because you can see in this chart the underperformance of the sector versus the S&P was just spectacular in the late last year, early this year, and now you see this colossal reversal. And we could be, when you have that type of capitulation, you had so much excitement in the space in 2018, literally conference after conference after conference all around the world, especially in Canada. You had a tremendous focus on the industry. A new group of investors came in, and then through 2017, 18, 19, there was really that washed out capitulation process in the fourth quarter, and then in the obviously the first quarter in March. And as you can see in the chart, right now the sector's outperforming the S&P by a wide margin. What part of the sector is doing the best? Any parts of the sector that are outperforming others in here?
Well, certainly right now, I think the companies that have the better balance sheets and on the U.S. side, the better footprint, those are the names that are leading the way. We talked for a long time about the fangification of U.S. cannabis, or finding those four horsemen of yore. And we talk a lot about that parallel to the dot-com bubble and bust. That I believe was a 72% decline from when the dot-com bubble burst to the nadir. Housing stocks, I think, was about an 84% decline in 2008 during the Great Financial Crisis. This was a 92% decline. Painful, certainly, and to the point where it really flushed out all sorts of hope, rang out the hope from the space. And I think a lot of people just moved on. And certainly now there's no shortage of things to trade out there. But as we look at the space and we look at the different components of the space, we've always framed this, Larry, as saying, there's three phases of this cannabis bull market. The first is that cultivation phase, right? Canadian cultivation. And we've seen that come and go by and large. And not to say that they're all behind us now, because there are certain names like Village Farms we love and we talk about a lot that we certainly think are positioned quite attractively here. But the 1.0 has moved to 2.0, which is consumer packaged goods. That's the notion that cannabis is an ingredient. And as cannabis prices go down, your input costs come down and your margins expand. It's accretive to your margins when your input costs decline. So anything that is using cannabis as an ingredient through that CPG phase 2.0, and that goes beverages, nutraceuticals, pet supplements, cosmetics, and vanity. There's a number of applications, many of which are non-psychoactive or non-euphoric. But cannabinoids, looking at the cannabis plant as a treasure trove of API, really sets a stage for 3.0, which we're not there yet. 3.0 is really efficacy-driven solutions. That's medicine. GW Pharmaceuticals, another one of our holdings. That's sort of the golden child right now of 3.0, but there's going to be more and more as that biotech pathway opens up and more of those clinical trials come through. You're going to see the whole conversation around cannabis really flip from wow, this is something that is a gateway drug to holy cow, this is actually helping to solve for some of society's pernicious diseases and riddles.
That's important because
it's all in front of us.
So many people don't understand that we're talking about the genesis of a multi-year medical solution with hundreds of possible channels. It's not about getting high, it's about getting well, as you've told me. In other words, there are so many potential drugs that could come out of this process in the United States of legalization. And it's not so much about selling weed in stores, it's about the drug lines that can come out in so many different places, whether it be lupus. What would you describe as some of the main, the highest potential in terms of long-term large medications?
Well, I mean, we built at the CB1CAP website, we built a research repository on the back end to help track all of the studies that have been done with the endocannabinoid system. And I don't want to get too far in the weeds here, but there is very much a science behind the ECS, or the endocannabinoid system. Wasn't discovered until the early 90s, hasn't been taught in medical schools or most medical schools. So Western medicine is largely in the dark about this. As a matter of fact, when we first launched the fund and would talk to these pharma analysts at sell-side shops, we got laughed out of the room because of some of the things that we were talking about. But now those same research analysts have done the work and they're starting to put out some of these papers about the quote unquote efficacious agility. And it goes across a number of different indications. Obviously right now, childhood onset epilepsy is an indication that's already approved by the FDA. That's GW's Epidiolex. But there are a number of other indications that we're excited about. And they range from everything from cancer to autism to Alzheimer's and a number of other PTSD. There's about 35 to 40 indications on our website. But just to give you a glimpse of where this is going, and it's all going to be, science-based. We like to say follow the science. We don't think many people are really paying attention to the science now, and that's where we think the real opportunity here is. 2.0, people are going to make a lot of money. The migration is going to come in from denial to migration. And then I think the panic will come when people realize that this is actually something that's good for you. When we understand the different cannabinoid profiles and the dosing and just really educate ourselves as a society about this, we think that it's really going to disrupt medicine as we know it today.
And so, Todd, one of the things we've been talking about in our Bloomberg chat with our institutional clients is that, we meticulously track sector rotation. In the last, month, we've had really 2 or 3 tremors in the amount of capital that was hiding out in these deflation trades in tech stocks. We've seen a big move into value. And as you can see here on the chart, the Russell 1000 Value Index up 30% since April 1st. 30%, that's close to 20%, but 15% more than the S&P. But, some people think in some respects, cannabis sector became a value sector because, the sell down was so significant. But the cannabis space is, close to 60% since April 1st. So in the value space, we've seen a big rotation into commodities. Many commodity sectors, copper dramatically outperforming the S&P, value outperforming the S&P. So a lot of capital is starting to flow into the value space. And, really a lot of people don't realize that you're talking about close to a 60% return in the cannabis sector since April 1st.
Yeah, it's all relative, Larry. I mean, listen, 60% versus, still down 80 some odd percent from where they were. Not to say they got to go back to where they were, because the leaders coming out of a crisis are rarely the same as those that enter it. And we do think 2.0, the profile of that winner in the new world of cannabis is going to be different than the 1.0 winners, as will the 3.0 winners. But remember, especially when it comes to U.S. cannabis, U.S. institutions can't traffic in these names yet. So one of the regulatory arbitrages that we talk about, and there's a few that we can talk about, but safe banking, which would presumably add safe harbor language to cannabis banking and turn this from a matter of law into a matter of compliance, which is huge, right? That leaves the decision-making process with compliance officers at the lenders to lower the cost of capital, and ultimately with the exchanges. We have to see what the language is on the Senate version.
Safe banking, that's a piece of legislation in Congress that has had fits and starts over the last couple of years. There's also a DOJ element there, a decrim element. I mean, could you get into, walk us through the next 9 months and the possible path through either decriminalization versus versus the Safe Banking Act?
Yeah, no, it's we think safe banking probably has the highest delta of passing for a few reasons, many of which existed pre-COVID, but now that they understand that the virus transmits on cash, it adds another layer on top of it. Certainly you have 34 U.S. attorneys generals, state attorney generals supportive of this. You have the American Bankers Association supporting of this. It flew through the House with bipartisan support. It's just, Mitch McConnell and the Senate have, if I can say, a bit of a hard-on for cannabis, but ultimately this is a banking issue. It's a safety issue with upwards of $10 billion of top line around of U.S. streets. You're seeing that a lot of these dispensaries were targeted during some of the social unrest that we saw over the last couple of weeks. So there is a motivation, not that anybody can ever accuse politicians of being pragmatic or doing the right thing. There are a number of reasons why, if you follow the money, that this could ultimately pass before the election, potentially as soon as the next coronavirus bill. But that's one element on the federal side. Probably the one that has the best shot of passing before the election. But on the other side of the equation, you have all these states, some of which are going to the ballots in November: New Jersey, Arizona, big states that we think continue the inside-out legalization of cannabis, throughout this country. That will be certainly something that's going to bode well for the space. But then you also have, the election on November 3rd. And the Senate being really what a lot of people in the industry are looking at to really be sort of if the Senate goes, if you can get Mitch McConnell out of that seat, it should be very good for cannabis, and that should begin to price into stocks. So that's also a potential tailwind that's not yet priced in to these. But again, Larry, the point is U.S. institutions have not started to buy these stocks yet on the U.S. side. You're seeing some of them starting to kick. I remember on the Green Thumb call, we had Leon Cooperman ask the first question. We know that some institutions and funds are getting into the space, but by and large, U.S. institutions are on the outside looking in right now.
So our partner, ACG Analytics in Washington, has been very helpful over the last decade. And what we typically do at the Bear Trap Support, and we work with people like yourselves, we take the clients around the Hill. ACG will set up the trips, meet with different members and different committees, try to get a feel for looking at both sides and trying to get a feel for where is that legislation, what's the probability of the legislation passing, number one, because oftentimes there's 2 or 3 trades. There's the momentum trade into passage, and many times the sector, and this is across the board, applies to the cannabis sector, can apply to energy, Keystone, many times as the probability of the sector successfully, say, passing or the catalyst, you'll have, in many cases, 80-90% of the trade get priced in. As we saw in Canada, once they finally passed, were successful with the banking legislation, the trade was almost over, at least for the first phase. So what we'll do is we'll take those clients around the Hill. Now ACG is doing a lot of work with setting up calls, but our institutional clients around the world, they want to meet with senators, they want to meet with the heads of the committees. And the feeling that I get in listening to ACG is that there's been so much deficit spending. We're obviously at a $2 trillion deficit. The CBO numbers, the Congressional Budget Office numbers are just jaw-dropping. And walk us through, not just, there's a whole bunch of different sectors that are starting to, I think, pick up some alpha, whether it be online gaming, cannabis. Washington is starved for new sources of revenue, especially looking out to 2021. And these election plays, as we saw in 2016, we were out with multiple reports at the Bear Traps report on the different election plays. And the winners and losers come election time can be spectacular. This sector could be right in the hot spot because you have a need, desperate need for new revenue. So that is a major catalyst or enforcement or incentive for senators and congressmen, number one. Number two, the probability of the Senate flipping has gone from 32% on, say, predicted 32% on predicted to 52. Whether you're a Republican or a Democrat, you have to respect that. And
it was 55 this morning.
55 this morning. Wow. So what you want to do as an investor sitting at home right now, the reason I bring this up is you want to start thinking, okay, if the Senate flips, what sectors do I want to be in? And to me, cannabis would be at the top of that list.
Yeah, no, I mean, listen, Larry, it's been a frustrating couple of years because everything that we have talked about remains in play, but the market got ahead of itself. Canada got ahead of itself. But I will tell you for what it's worth, and I've always been early, 30 some odd years, 30 plus years on Wall Street. I'm typically early. The difference between whether you're wrong or whether you're early is whether you're still there to collect on the bet. But this is going to be, I think, going to be one of the most profound opportunities of our lifetime. I mean, you can look back at the parallels between the Great Depression and the repeal of Prohibition as the script. And certainly, it's going to be tricky to figure out which of the products in the CPG world are going to outsell other products, but they're going to be, again, the fangification. There are going to be the group that carries us through to the next bull market. And when we start to see those clinical trials come through and people start to understand that this is not just for epilepsy or not just for autism or not just for, a plethora of different indications, as those prove through, you're going to have all of these late stage adopters. Everybody who said, this is the devil's lettuce, this is terrible, I will never do this, I'll never smoke it. Of course you're not going to smoke it, because in 2.0, you're going to drink it, you're going to eat it, you're going to rub it on, you're going to stick it in, you're going to take bubble baths in it. You're not going to smoke it. I mean, some people might smoke it the same way some people listen to vinyl records. But again, it's not about getting high. As you get older, as we get older, our endocannabinoid systems, the tone of our endocannabinoid systems change, which is why the fastest growing demo in cannabis is older people, right? Which is why we love Florida as the epicenter of cannabinoid wellness. 3.5 times the national prescription average. You have the elderly population. And again, it's not about pulling bong hits with grandpa. This is really about a better way to take care of yourself, a more natural way to take care of yourself. And all of that is still in front of us.
So walk us through just your top 3 catalyst points for the next 6 months. In other words, what dates are you looking at, for investors? Like, what should investors be looking at for the next 3 to 6 months in terms of dates, catalyst? I think you mentioned in our Bloomberg chat with the institutional clients, we have a vote in New York next week.
Yeah, I don't know if that, I don't think that vote, there was a bill that was tabled by one senator, but I don't know if that vote necessarily is going to go through, but I will tell you it's a matter of time. New York will pass. They're going to pass because New Jersey's going to a vote in November. They're going to pass because Pennsylvania is probably going to flip. We've heard rumblings of a referendum in Pennsylvania as early as November, as early as April. The tri-state area, Connecticut, they all need the tax revenues, and it makes little sense to, for one state to legalize and not the other. That creates a lot of problems about driving and other issues. And certainly, they don't want to lose the tax revenue. Like, when all else fails, as I tell my kid, if you ever want to know who did it, follow the money. And I think the same is going to play through with cannabis. There's a lot of money, and it's not going to cost taxpayers a red cent, right? And that's a big issue, right? Like, you talk about how much is safe banking going to cost? Safe bank is not going to cost anything. Safe banking is going to put over $10 billion in the banking system, which is why the bankers want it. And Safe Bank is going to get the money out of the dispensaries and allow for credit cards and allow for lenders to make the decisions on their cost of capital. U.S. operators paying up to 30% for cost of capital, 30% blended when you factor in the warrants and the other predatory lending that's taking place now. We're seeing new entrants coming in. We're seeing that cost of capital come down. But when you have a safe harbor provision in the banking, in the federal banking system, it's going to be the game changer. It's going to be the Yahtzee moment for U.S. cannabis.
What are the estimates now for potential tax revenues for Uncle Sam and for the state? So say over the next year or say the next 5 years, what are some of the estimates?
Yeah, I don't want to cuff the number, but it's the billions upon billions of dollars. I know they're estimating. I think it was Piper Sandler was estimating up to 1 million new jobs. There's 250,000 jobs right now in the U.S. cannabis market, none of which are being counted by the BLS, right? So, I mean, here you have an industry that's contributing to society, contributing to the tax revenue, contributing to the employment, uncrowding prisons, uncrowding court systems. I mean, there's a lot of reasons that make sense, but ultimately it's going to be about, keeping up with the Benjamins, and that's what's going to move this. But I think the wellness and that tail is going to be what continues to drive this sector for the next 5-10 years.
And investors have to watch both your state actions, and I think you said you had 34 state attorney generals and that's up from probably 3-4 years ago. So you need to watch that element. Then you need to watch movements like the Black Lives Matter issue are very powerful, because to me, that's a big what we call decrim catalyst, decriminalization.
Social
could pick up steam.
Social justice reform. You know, when you have guys, like me who are, who have business investing in this space, and you have a disproportionate amount of people who are locked up for possession, it's wrong. I mean, it's just not right. So, when you talk about New York, say yes, New Jersey in November, or possibly Pennsylvania in April, and you have the unemployment, the employment gap, and you have the tax gap. But you have this now a political will for social justice reform, long overdue, I might add, that I think is going to really be that little extra tailwind that this may need to really push forward.
And ACG has held ACG Analytics in Washington, our partner, has hosted a number of client calls on this. The point that they make is that starts to provide cover, the decriminalization element, the state attorney generals. I'm just kind of walking us through the catalyst. All of that is like a foundation, and that's your cover for a piece of legislation that could be absolutely historic, because once the senators and the congressmen have seen action at the state level, enough of it, then they're much more comfortable picking up the torch in terms of banking. And that's kind of like, and if you think about the steps we've already had out of a 9-step process, it looks like we're probably at the 4th or 5th stage here, because we do have a pretty solid foundation, enough to, and with a movement in Washington that's drifting, a touch left here over the last, just look at the Democratic Party position over the last decade. You've gone, you're shifting left. You would think that this is all framing up for a major piece of legislation next year.
Larry, you have 92% of the country supportive of medical. You don't have 92% of this country supportive of anything, right? This is truly the last bipartisan issue. I think 67% supports recreational as well. But you talk about catalyst, 3 levels. This is the way we look at it. We look at it across 3 levels. We look at it at the state level. We talked about New Jersey. We talked about Arizona that we know of, at the ballots in November. But again, we think New York, Pennsylvania, Connecticut, Maryland, not too far behind. And then, so that's on the state side. On the federal side, we talked about the State Banking Act. There's some other legislation, States Act and such, but that probably doesn't see the light of day with McConnell in there. And I will also add that we've been told, our intelligence on, in the Hill has said consistently that McConnell won't pass as standalone, but if Crapo's on board, that they would fold it into another piece of legislation, which again, seems to point to the potential coronavirus relief bill if there is another one in July. But the third layer for catalyst is the international level. And we just heard 2 weeks ago that the UN will hold their vote in December after postponing it for the last 2 years. The WHO, which actually used to be, have some say on the matters of the UN, has already recommended rescheduling cannabis. The UN has never veered from a WHO recommendation. So that's another, another potential catalyst, which puts the international, scope back on the table for the Canadian majors. So there's a lot. I will say, just because we've been talking about this for a while, and certainly, I'm pretty bullish on the space looking out over the next number of years. But a lot of these names have had pretty, as you alluded to, pretty significant moves. Village Farms, we were buying this thing at $2.80 not too long ago. It closed at $7 today. That's a pretty big move. We think it goes a lot higher, but we're not here to necessarily tell people what to buy or when to buy it. But just that a lot of these things have had pretty massive moves, and some consolidation certainly wouldn't shock anybody who follows the space.
Okay, and in closing, you want to wrap it up just in terms of, what's your elevator speech in terms of I know you do a lot of work on the speaking tour. You're a fantastic speaker. I've seen you speak at conferences, but what's your kind of wrap up speech for looking out over the next 12 months and just recapping our conversation today?
I mean, listen, it hasn't really changed. I mean, the prices have changed, but the story hasn't really changed. And it's really about, trying to identify asymmetric opportunities in the marketplace and trying to look at some of these arbitrages that exist, whether that's a time arbitrage, a price arbitrage, a perception arbitrage, or a liquidity arbitrage. And when you have those things lining up, and now you're starting to see some of these metrics, such as the technical metric, support some of the fundamental work that we've done on these names. I mean, we think a lot of these names are just way too cheap because they're not known on the street. I mean, I can pull out a research report we did on Village Farms in August of 2017 when the stock was at $1. Stock ran to 18 last year at this time, basically, saying everything that we put into that first research report. So it's a matter of just educating yourself, finding the quality, avoiding the quantity. There's a lot of hucksters, in the cannabis industry, as there are, I think, in any industry. So there's a pretty wide credibility chasm. But if you find the right people that you can trust, I think that certainly there's a lot that we can do together in this space moving forward as the institutions start to migrate over into this industry.
And in terms of the top line, we've seen in the recent quarter, we've seen 20 to 30% top line growth in U.S. companies. That's on the report that you sent me in terms of that recent results.
I don't think we've seen anything yet in terms of the U.S. as some of the scale comes on. I mean, we talk about the fangification. I think right now, if you had to say, what companies are those companies best positioned to be the four horsemen of this next phase, I think you would have to say it's Curaleaf, Green Thumb, Trulieve, and Cresco right now is making that play as a fourth horseman. I leave GW aside. I think GWPH is in a class by itself. I think it's the most misunderstood stock in the universe. But again, this has also doubled off the March close. So it's, you have to sync your time horizon with your risk profile. But I think that investors will start to migrate to the space with the 1 to 5% allocation of their book to cannabis as a growth hedge. And as they get more comfortable with how the industry is unfolding and evolving and maturing, I think that number has room to go up.
Yeah, it's a highly speculative space. And with that, I want to make sure that we, give me a second, I want to make sure that we put up our disclaimer here. But Constellation Brands is a perfect example. You have, Constellation Brands, you have large companies that have made significant investments in the space. And I think Constellation came in last year, about 3 years ago.
Yeah, I'll tell you, at the time of the deal, I thought it was a brilliant move. the reason I thought it was a brilliant move is I thought it was an opportunity for Constellation to really diversify their revenue streams, get away from just beverage and move into things like nutraceuticals and edibles and really maybe even a biotech and drag, depending on how these sleep trials go. So, as more and more people understand sort of the wellness side of the equation, the science behind this, I think that you have a potential for repricing of some of this risk to include those potential outlets and revenue streams. So I don't think that the last chapter has been written in that deal. I still think it's a good deal. I think the market's just going to take some time to get around to it.
But Constellation's entry point was substantially higher than these levels, correct?
Yep. No, Canopy's down. I mean, listen, Canopy went from, I think, the high 50s to low of 10 not too long ago. It almost, pretty much doubled into their earnings report. It really wasn't that great of an earnings report, but that being said, this is a name that's like I said, the whole space has taken its pound of flesh. This is a name that I think if you want to be in cannabis, this is a name that has to be on your radar. So we're involved. It'll be interesting to see if this can fill the gap back up to 22. But a lot depends on the broader tape. Again, a big asterisk for this entire conversation is the relative strength argument. It's hard to tell how this sector is going to react when the tape actually goes lower. It's been so long, but that's the sort of the unanswered question to this, the cannabis trade right
now. Okay, and just wrapping up, thoughts on your 1 or 2 points looking out next 12 months, like as you've covered, looking back over the last 12 months, we've gone through, the capitulation process. Anything else in terms of wrapping it up?
I don't think so. We do a newsletter. We produce a newsletter every morning that's a recap of the space, highlights around the world in terms of what's going on. That's free. You can sign up at cb1cap.com. We want to educate people about the opportunity. And yes, we were a little early, and yes, it's been a painful couple of years, but you got to look forward in this business and you got to think positive in this business. And we're doing both right now.
Great. Well, thanks for joining us, Todd.
Thank you, Larry. You take care.
Okay.